Hey guys, welcome to another beautiful Sunday here from the western part of Nigeria, Africa. I think we're in the west, right? I'm in Lagos. I don't know. Right. So moving forward, guys, if you're new here, welcome. If you're not new here, welcome back. We're going to look at COT reports today on specific assets and look into possibly seasonality and probabilities. Now, I've not done any analysis so far. I just had these guys open just to look at what's happening. If you've never seen this before, you might want to check previous videos for explanation about this. But mainly, we do three things. We look at COT reports, seasonality, and probability. Now, this is a quick disclaimer for everybody, right? It has to be put into this video. I'm not telling you to put your money into any of these assets or any of this. I'm just doing this for educational purposes only and to show you there's a possible different way of looking at what you're already looking at, financial market, or what you're not really looking at. So this might show you some unknown unknowns, or might show you some known knowns, or might show you some known unknowns, right? Whichever it is, take this information at your own personal discretion. So COT report is basically showing us what commercials are doing. Commercials are people, or let's call them organizations, that are not really interested in making money out of the market. They use it for their day-to-day activities. And those are the people that want to follow because they don't really care about, if market is going up or down. They just want to know that I'm buying this at the right price, right? I need gold, for example. I'm going to buy gold at 1,800, 1,900, or whatever price it is. And I want that not because of I want to make money off of it, but because I want to take that gold to make a spaceship that goes to NASDAQ, that goes to the moon, for example, or I want to make a cell phone, for example, or I want to make your laptops or any instruments that need gold. Or I might just want to buy some of it and put it in the National Reserve. Yeah. So by default, they have to tender that position to the government in the United States. And that's why we call them commercials. We mostly fall under this category, non-commercials. We don't pay attention to these people. You have hedge funds here, banks here, and all of that stuff, but these guys are quite good. So what we look at is the changes if they're going long or if they're going short. So looking at this asset on gold, we can see, we look at the changes, long or short. We can see that they're going both long and short. They're confused. If they're confused, don't even touch it. Right? Now, I don't want to, I don't have seasonality for silver at the moment, so I'm not going to look at that. But we have S&P 500, so let's look at that. They're also confused here, so we leave that alone. So if you're looking at this, you can see I've already analyzed two assets in less than 30 seconds, right? I can analyze three now. Let's see. Oh, look, both of them negative, negative. That's third asset analyzed. I don't even need to look at the charts. None of that. I don't need to draw. I didn't even waste my time. All right, Dow Jones. Oh, they're not looking, good. They're looking different. I don't have anything about Russell and all that, so I'm gonna leave that alone. So I don't have seasonalities on these neither, so I'm gonna leave that alone. But for guys that trade FX, me personally, I've kind of transcend it. I'm looking for something more stable. Mainly, it's not mainly because of there's no cash there. There's a lot of cash there, but the more you tend to grow in life and you have more assets that you're holding, you want more free time. So I don't want to be on the chart stuck there 24/7. I want to have time to do stuff for my own self. So for the guys that likes the trail or being in the FX market, we could just run through one or two FX assets for you. It's still accurate and everything. So on this, for example, AUD, when I normally take trade FX, I don't really like AUD, but AUD is looking good, short. So what we quickly do is, for guys that haven't seen this before, we call this seasonality. So we're going to quickly go on the site, go into Forex, no, not Forex seasonality. Let's click on seasonality right here. I like it in the future state. So we look at AUD as an individual asset. And once you know the direction as an individual asset, it's quite easy to know where it's going to go as a collective. So Australia dollars is going short. So we're going to look at a seasonality chart for 21st of July. So 21st of July, right around here. So if I just zoom in, we're right around here, right? So as seasonality is showing short. The 5, 15, and 36 years average price movement in the last 365 days is showing that. I mean, we haven't updated this to 2024 yet because you don't really need to update it every year. It's practically looks similar. So look at the 21st. Indeed, it looks like it's gonna go short, but it's not gonna last a long time, and it doesn't really look very efficient for me. So even though COT is telling me short, I will not take this trade because of seasonality. It doesn't look too appealing. If we're saying short and we're right here, for example, I know I'm going down. All I need to do is now check the probability and just follow that. So for this reason, I'm gonna leave this be, and then we'll go to the next assets. I want to see if I can find something stable for you guys to look into. Let's check COT on GBP. Look, another asset analyzed. I'm not even going to touch GBP this week. So everybody's trading GBP this week. Be careful. You know. Oh, Canadian dollar looks good. It's going long. We now go into what is it? Oh, there we go. CAD. We go to CAD. Seasonality. And 21st. So we're right here. Let's go zoom in again. So we're right around this period, right? And from what we can see, it's telling us long, right? And you're seeing the CAD is telling me short. So it's quite obvious, right? There's a divergence. One is telling you to go down, one is telling you to go up. Long means buy, by the way, if you don't know what long is. Long means go up, short means going down. So we can see this is clearly looking like down on all three averages. So we're not going to touch that. We're just going to leave that be, move to the next one. And that's another 3 asset analyzed already. Next one, euro. Euro is looking down, right? So we're going to go, you're right there. Thank you. Right here. So it doesn't really look good. See, it looks slightly wonky. If you look at this chart, right? If you compare this euro chart, for example, with the indices chart, let's say S&P 500, you see a massive difference. Look at the difference. These guys look one directional, right? And it's not just S&P 500. Look at DGI. This is what DGI is saying. Looks slightly one directional, right? So look at DK, right? Slightly one directional, right? Not the massive dump on there, probably there. See, one directional. But the moment you start looking at FX, right, you start feeling a difference. Okay, except from UK. Okay, UK is on the next level right now, but still doable. You can see it's clear trend down here, go up here, wait, down here, you know. But if you go to the seasonal, right, or look at Euro. Up, I mean, up here is good, and then got that divergence from the 5 years down here. These guys are going down, this guy's going up, you know, compared to the other ones. But long story short is I've done a bunch of analysis and I haven't even found a good asset yet. And that's a lot of filtering. That's you, everyone that you filter like that, you save yourself time, you save yourself effort, you save yourself money. You save yourself all 3 essential minerals to make money in investment. Time, effort, and money, because your emotion and all of that will not be thrown under the bus, right? So have peace of mind when you're investing. You come here, you look at it, or spend, I mean, a good 30 minutes to an hour will be a decent time once every week. It's not a bad investment. And for the guys that have the EA, just once you've done that, maybe an extra 15 minutes programming your EA for the week and leave your computer on for the entire week and pay your light bill. And if you have solar system like I do, I have solar panels, you know, it's free. You pay for it one time. So it's free. Leave your laptop on for the entire week, and then at the end of the week, come collect your money or come collect your losses. Major of the time, collect your money. Especially when you're looking into indices like these guys, Majority of the time, they come in at the end of the week collecting your money. I mean, this is daily chart, right? If I invested it on this day, I'll collect my money on this day. If I invested on this day, I'll probably collect my money on this day. Invested on this day, I'll probably won't make a loss on this day. Invested on this day, collect my money. So every week, I can just go here blindly enter on one day and come out. I can go in on Monday. I mean, if we do, there is another probability chart that shows us the chances on a Monday. You understand? Every Monday, if I go in on the market on S&P 500 every Monday without even doing anything, just going in a direction. So I know that I go in on Monday, I come out on Friday. It tells me the percentage of win on that specific day. And I know the specific months that's going to act better because I also have the seasonality of it. So, you know, you can really slice and dice the market once you have a steady pattern looking stuff. You can just, you know, you can automate and make it robotic from that point on. But it is what it is, guys. Let me not digress. So thanks for joining today's webinar. There's a lot more assets to look into. I mean, if you want more stable ones, for example, like coffee, cocoa, cottons, and all of that stuff, you know, these guys are not looking stable as well. Let's check sugar. There's a lot more. And if you want, if you're like energy dense, you know, natural gas, so look at a lot of analysis just like that. Man. We've just done so many analyses by seeing that analysis done. I just have to look at it once and know if I'm going in or not. Done. Understand? Look at it. Done. This one I know, okay, yeah, I can go into this one. Now, once you get this, you get a seasonality. We don't have a seasonality of this, but if there was a seasonality, if the seasonality looks good, you know, take the probability as well, it looks good, that's a winning trade. You know, about 97%. Now, educational purposes only. All right, guys. God bless you all. I wish you guys a beautiful trading week. I don't have time to go through everything with you, but you know, you can always go through it. If you need more assistance and need the tool, go into the link in the bio and follow it to the website, or alternatively go to business.dmempire.co.uk at the top here, and it will give you access to this tool. Go to the pricing section, you get the pricing for each tool there. All right, guys, catch you on the next one. Stay dangerous. Godspeed. Bye.